Wall Street is weighing bets on the presidential election. Traders and strategists ponder market response of a Biden-Trump rematch. 9 months ahead of the American presidential election, investors are already thinking about how financial market might respond to the outcome of the vote and how they should trade to prepare for it. Stock markets have soared to record highs in recent weeks, while government bond yield, which underpin interest rates for consumers and companies, are down from a recent peak in October. Despite the uncertainty of making political predictions, money managers are already contemplating how the election could alter the mood in market. The prospect, the combination investors see as the most likely to drive a shift in financial markets in November, and therefore the scenario that traders are spending the most time thinking about is a Republican wave in which former President Donald J. Trump returns to the White House along with the Republican sweep of Congress. When Mr. Trump had won the presidential election in 2016, and the Republicans maintained control of the House and the Senate, expectations of lower taxes and a looser regulatory environment juiced growth expectation and major stock indexes rose. These policies, which cut the government's revenue and raised its borrowing needs, also propelled a sharp rise in government bond yields. In the event of a Republican wave, investors expect something similar. A Democratic wave, a Democratic sweep of Congress and President Biden's re-election is seen as less likely and is therefore getting less attention, though that outcome could also lead to increases in government spending and higher borrowing costs. And should the election result in a government divided as it is now, then the prospect of further legislative gridlock would probably temper any response in the market.